I'm Kumar DJ Arnett. Welcome to the ALSET channel, Reaching for the Stars Academy. If this is your first time here, welcome. If not, welcome back. And today, what I want to do is kind of give my reaction to a couple of the analyst viewpoints that were on the major networks today. And I always think it's interesting to kind of, hear what the analysts think, how they react, to positive news, how they react to negative news, but also how they frame it and what the narrative is, that they're looking to give to us. So, let's kind of get started with CNBC Squawk Box and see a little bit of how, they covered Tesla's earnings beat.
Gordon, I want to get your response not only to the delivery numbers, but to what Gene just said about defining a growth story. I have a feeling you're a little more skeptical about it.
Yeah, we think the fourth quarter, the year-over-year growth is irrelevant. Look, we think the fourth quarter is what matters. What happened in the fourth quarter of last year is Tesla effectively had fully passed through the massive price cuts in China, and its Shanghai facility was fully ramped. When you also consider that they've effectively picked the low-hanging fruit of entering the world's largest three auto markets, U.S., China, Europe, and their sales grew just 2% quarter over quarter, despite 15 price cuts in the first quarter of this year, 18 price cuts total last year, and 52,500 more cars of capacity sold. They didn't have any chip problem. They produced more cars in this quarter than they did last quarter, and they grew just 2% instead as a big problem. One other thing, keep in mind, they sold significantly less higher margin model S and X cars in the quarter and significantly more lower margin Model 3 and Y cars in the quarter, which we calculate is going to be roughly a $300 to $500 million hit to their bottom line.
So I think this is really interesting, right? And if you're not familiar with the Tesla community and how the major networks cover Tesla, Gordon L. Johnson is extremely popular, right? He's the Tesla naysayer. He's the Tesla bear. Now, keep in mind, this guy doesn't trade money. He doesn't manage money, right? Right now, he is CEO of Gordon L. Johnson Research Company, right? So I believe, his bearishness and short selling on Tesla, really got him out of a position when he was actually working with a company and managing funds. So now what happens is a lot of these networks bring Gordon L. Johnson on to be the bear for Tesla, right? And I think, at one point there was a lot of vitriol coming from us in the Tesla community. We weren't a big fan. We didn't like him. Some people might have hated him. You know how people get so fanatic. But I think now he's someone that we actually love to see, right? He's like a parody. It's a comedy. And I thought about it this morning. I liken him to Skip Bayless when you hear Skip Bayless talk about LeBron James, right? If you watch Undisputed or First Take, then what you'll always hear is no matter what LeBron James does, Skip has a way to twist it into a negative and become the LeBron James antagonist, the LeBron James bear, right? And then I think about it, that's what Gordon L. Johnson is for Tesla. So no matter what Tesla does, he's always going to have a negative spin. He's going to find a way to spend it so that it's not positive. And he's going to be serious about it, right? There's no smiling here. There's no joking, right? But if you look at what he did, he completely tried to kidnap the narrative. Everyone knows that first quarter is slower for auto sales. So what he says is, no, what I want to do is I want to take fourth quarter of 2020 and compare that to first quarter of 2021 and say there was only 2% growth, when in actuality, if we compare first quarter of 2020 to first quarter of 2021, we get 109% growth, right? Which fits into my thesis, what I believe, Stephen Mark Ryan believes, and a lot of people in the Tesla community, which is that Tesla's going to deliver 1 million units. So Tesla gave guidance of 50% year over year growth, right, for the next 10 years, we believe that a lot of these years are going to have 100% growth. Now, you tell me what company is growing like that that's been around as long as Tesla has.
So you're looking at a company, a high growth company that's barely growing, that's losing more money doing so, is going to see all of its credit sales disappear next year. Look, these guys are valued at $700 billion. They sold 184,000 cars. VW sells about 2.5 million cars a quarter. They're valued at 162 billion. And Tesla grew sales just 2% sequentially. You don't know what people are talking about when they say this is transformational growth. 2% is not transformational when you cut your prices 15 times and you have 52,000 more cars of capacity.
Yeah, Gene, I mean, just to dig into that a little bit more, you do have that sunsetting of tax credits, at least for now. We'll see what this proposed infrastructure plan actually brings to the table and manifests as reality. But the production numbers, do you expect those to ramp up? And when you do look at other emerging competitors like GM, are they going to cut into market share?
Morgan, if it's okay, I'd like to talk about the 2% comment.
Okay.
Can we back up one step there? It's true, it grew 2%. The challenge with that, my challenge with that logic is that it's a seasonally light quarter. Typically, auto sales in first quarter are down from December, so I think that is a clearly positive. And then I want to jump to the substance of your question around competition. Is that this is ultimately the biggest risk to Tesla, is that the traditional cast of characters, traditional OEMs get their act together. We talked about the electric Hummer. I'm a little bit skeptical that that's going to get any sort of mainstream traction, but that is the risk, and you will see Tesla's market share decline. It's 80% in the U.S. It's a much, much lower. They're losing share in Europe. I think that will reverse when they get the new factory there, but that is the question. I would just point to this piece around competition as investors contemplate the impact of competition. Tesla started out as a high-end brand, a wealthy person's brand, and they are successfully navigating that brand globally to an everyday person's EV brand. And the reason is that the value of the car exceeds the competition. If they can maintain that edge, I think that competition will, yes, they'll lose share, but they'll continue to have a measurable piece of a massive addressable market.
So Gordon L. Johnson has a price target of $67 on Tesla. And it's interesting because we've seen this movie a year ago, right? And there's potentially going to be another split, and his price target continues to go down as Tesla splits, but he still never catches it. So even out of the split, will most likely start higher than this 67, even though a 67 will probably end up being something like 6, depending on, what type of split it is, right? So I think that's laughable. Number two, the idea of competition with Tesla, and I think the idea that people have that simply because these legacy automakers make cars, that means they're going to be able to compete with Tesla. Once again, we've seen this movie before. It's like when Apple came into the cell phone network. There were people that were making, cell phone industry. There were companies that were making cell phones, Nokia, Razor. You name it, right? BlackBerry, right? Where are those companies now in relation to Apple's market cap, right? So the idea of saying just because these people make phones, they're going to be a threat, they're going to compete with Apple, to me is similar to saying just because these people make cars, they're going to be a threat and they're going to compete with Tesla. There's no competition because these guys aren't doing the same thing that Tesla's doing. Apple made a computer phone and Tesla is making a computer car, right? So you've got two different factors. It's energy and it's the computer, tech, AI, software component of it that makes Tesla totally different. So it makes me think of my aunt, she's in the 70s, and she's getting into computers and she's doing Zoom, and every now and then she'll send me a Google sheet. And to me, I'm like, that's cute. Like, my aunt's adapting, right? So, but that doesn't mean that I'm going to call her the same as my 21-year-old niece or my 25-year-old niece that grew up in the tech age, and she moves with the speed of light through texting and zooming and TikToking, and just her agility with tech and software is on a total different level. So it's like when you try to compare a Volvo or a GM to Tesla, to me it's the same thing. Oh, now you want to call GM a software company? It's a joke, right? It's not the same thing at all. They just happen to make cars, but they make ICE cars. They were in the industry. Think about it. They were in the industry forever, and they never thought of this concept that Tesla came up with. And now that Tesla's done it, now they want to follow the lead. But if you really think these guys are competitors, they're not. If anything, they're followers.
You can take a look at shares of Tesla. They are up more than 7% pre-market after the company on Friday, while the market was closed, reported much better than expected deliveries for the first quarter. So as you take a look at their full year deliveries over the last 5 years, keep in mind that we still haven't gotten a full guidance from the company in terms of what to expect this year. But for the first quarter, the company reported 184,800 vehicles delivered, far better than the expectation of 172,000. Now, almost all of those were Model 3 and Model Ys. I know you're going to be talking with Dan Ives shortly. He put out a note over the weekend saying the trajectory based on the first quarter deliveries now puts Musk and company to exceed 850,000 vehicles delivered for the year, which is well ahead of whisper expectations. By the way, those whisper expectations close to 830, 825. It moves around quite a bit, but that's where most in the street are expecting it right now. And by the way, as I said earlier, as you take a look at shares of Tesla, the delivery guidance for this company this year has been vague. All they said is that they expect a 50% increase in deliveries annually. Give or take, some years will be a little more, some years a little less. So we haven't had a definitive number from Tesla so far. Did you see this over the weekend? I want to shift gears and talk about General Motors and the new GMC Hummer SUV. Yes, you might be saying to yourself, wait a second, didn't they already show us this? Well, what they showed us was the electric SUT, because it was a truck. It is a truck, and it has a flap in the back. This is an SUV. It will come out in 2023. The first editions will start at $110,000, and the head of GMC believes the market is just starting to heat up for EVs.
You can just see really all the big manufacturers and obviously a lot of the new startups as well are really racing forward. And I think that's going to mean the adoption rates for EV vehicles amongst the general buying public will probably pick up speed and progress quicker than maybe people were thinking just 1 or 2 years ago.
As I mentioned, these Hummer SUVs, they will roll out in 2023. Look at this chart for General Motors over the last 6 months. A nice move higher. This is the beginning of this cadence of vehicles, guys, that we've talked about, that General Motors will be rolling out starting later this year with the Cadillac Lyriq and then progressing, including these Hummer SUTs and SUVs, as well as other electric vehicles. Really the start of GM rolling out more SUVs and trying to make a true play when it comes to electric vehicles over the next couple of years.
No shit, Sherlock. You think? Like, this is hilarious. And then the way that this guy is covering it, as if to say that General Motors coming out with a Hummer EV in 2023 is on par or is as exciting as Tesla smashing the street's estimate. And for some reason, he continues to reiterate, keep in mind, this company gave minimal guidance. They gave vague guidance. Like, the narrative and the bias and spin that CNBC continues to put on Tesla is so obvious, it's getting to a point where it's insulting. Like, sometimes I wonder if this guy, him in particular, has stock in some of the legacy owners, because he seems to get so excited about nothing in their standpoint. I mean, he seems so much more excited about GM, right? And he even coached you. Remember, guys, this is the beginning of, like, once again, you'll be 100% EV in 2035. Tesla is 100% EV now. It's like when they used to say in football, if you got 2 starting quarterbacks, you don't have any. If you got legacy and ICE vehicles, you don't have any. How are you going to dominate either one? When you've got the smartest company in the world, led by one of the smartest people in the world, giving every iota of their energy and focus to EVs. Like, this is laughable.
Markets may have been closed here in the U.S. on Friday, but Tesla was out with some major news, and investors are excited this morning. The company announced that it delivered 184,800 cars in the first quarter of the year. The stock is up about 7% in pre-market trading following this news. And Wedbush analyst Dan Ives out with a note this morning, calling that number a paradigm changer for the company. And Dan joins us now to discuss. Dan, appreciate you hopping on to talk about this news. So walk us through your thinking now, not just what you saw in the first quarter, but how you're now thinking about Tesla's trajectory for the rest of this year and beyond.
Yeah, and I think it was a game changer in terms of what we saw in 1Q. Whisper numbers were as low as 160, 165K, given chip shortage, as well as what we see on the S and X. I mean, I think China's skyrocketing growth, and that's worth potentially $150 per share of the story. And I look at this as a green tidal wave with Tesla leading the charge. And I think we're going to start to see potentially 900,000 units, trajectory that out, even though it's been obviously a painful sell-off for Tesla and EV names. Now, I think this is just the start of a massive rally, 30 to 40%. $1,000 our price target for Tesla, bull case 1,300. And I think this is a really golden buying opportunity.
See, Wedbush and Dan Ives particularly they get it. Like, they actually see, right? So when he says paradigm shift, beginning of the green wave, right? It's similar to what I talked about in terms of the flywheel, right? The snowball. Like, there's always a pivotal moment where the flywheel starts to spin at a point and you realize that it's not going to stop and it's going faster and faster and faster and faster. And what Dan Ives is basically saying is, in this quarter, when everybody thought they were going to miss the street estimates and Tesla had every explanation or excuse to do it, chip shortage, stop production on S and X models, right? A ship being stuck in the Suez Canal, pandemic, right? And not only did they not miss, but they obliterated the street estimate. And Dan Ives is saying, I believe that this is going to be that seminal moment where we start to see Tesla deliveries take off. Then we start to see self-driving subscriptions. Then we start to see the Cybertruck. Then we start to see semis. Like, how do you not see, just looking at that chart, that we're getting exponential growth? Tesla's a company that have the possibility or the ability to see a minimum of 50% year-over-year growth, but a real shot at 100% year-over-year growth. And if quarter 1 2020 to quarter 1 2021 is going to be indicative or any indication of what we'll see, then maybe we get 109% year-over-year growth in 2021 for Tesla.
Hey, Dan, it's Julie here. How has Tesla avoided the chip problem that all the other automakers seem to be having? I mean, you need as many, if not more chips for Tesla, I would imagine, as you do for a Ford F-150. So why isn't Tesla having the same production issues?
Yeah, and it's a great question, Julie. I mean, it's still about 10% headwind. So I think it just shows without the chip shortage, we're probably looking at a 200K number.
Did you hear that? Dan Ives believes that without the chip shortage, we're possibly looking at a 200,000 delivery for Tesla in quarter 1 2021. Extraordinary.
And I think it just really speaks to it's the pent-up demand. Right now, we're seeing it. Of course, China and Europe leading. We think China can be 40% of deliveries for Tesla by next year. But look at what happened last week. Biden kicking off the tidal wave, the green tidal wave in the U.S. 2% of automotive today. We think that goes to 10% in the next 4 to 5 years. And when you look at EVs, these are stocks that continue to re-rate. You see it even in a GM. GM is going to continue to get re-rated, not as an auto company, but a disruptive technology player.
Dan, you mentioned the Biden administration. How much is a new EV tax credit worth to Tesla? Are we talking, over the next 5 years here, it could be the type of profit driver that takes Tesla shares to, what, $2,000 a share? Who knows?
Yeah, Brian, I think that's the key, because if you look at it today, if me or you or anyone else goes in to buy a Tesla at $7,500 tax credit, you're not getting for a Tesla or a GM. They've already gone through that $200K ceiling. I believe as part of the infrastructure bill, the $2.3 trillion, you see those restored. So the tax credits come back to the Tesla and GM, and we're hearing out of our contacts in the Beltway that $7,500 could potentially be $10,000 in terms of a credit. And that's going to be a massive catalyst, not just for Tesla, but for the EV ecosystem in the U.S. as part of this green tidal wave. I think we're just starting to see this all play out domestically.
So I think that's important too. When people talk about market share with Tesla, yes, as the EV market expands, Tesla, of course, they're not always going to have 100% of the market share. They're not always going to have a 90% of the market share. But if you ask me, are they going to be the predominant player in the EV space? Absolutely. Like just how you've seen how sales have increased, the expansion into China, I would expect to see the same thing once the factory in Berlin is up and running, right? And then I think there's probably maybe 2 or 3 locations that can really accelerate the growth, right? And as many people don't think that India is one, I think it is simply because of the population, the opportunity for energy, and the expanding of the economy. So it's like maybe people can't afford them today, but as the economy continues to expand, it's going to grow. And being there will help Tesla Energy, but also Tesla Auto. And I think even the AI, will have an opportunity to grow and improve in an innovative, thinking type of market, like India. Like there's nothing like the thought that human capital and people can produce when they're in a growth stage from an economy and just, living and expansion in terms of opportunities and how this company can start up and this company can start up. I mean, that's one of the times when human capital and their learning agility, their innovation is at extraordinary highs. So I think, maybe Australia, potentially India, and then maybe there's something else in China, but then maybe there's an opportunity in Japan as well, it has a great economy. So, and then we haven't even spoken about South America, right? So the sky's the limit for sure.
Dan, is that tax credit, is that factored into your $1,300 price target on Tesla?
That's the difference between 1,000 being our base case, 1,300 being the bull. And I think it's something that, despite this emotional bull-bear story, I think lost maybe in the noise in terms of what this could mean in terms of that tax credit boost for Tesla and EVs. And that's why if there was a quarter they were going to stumble, it was 1Q. And that's why I think whispers continued to move down. You look what we're seeing on Model 3 and Model Y. When that number came out Friday, it almost fell off the chair in terms of just how strong it was.
We also, Dan, just got those Xpeng numbers for the quarter too, and it looks like just over 13,000 is what Xpeng delivered, 13,340 units for that company. When is Tesla going to see some more real competition in this market? I mean, it's coming. We all know it's coming. At some point, it's going to be maybe more problematic for Tesla, maybe not. But when are you kind of expecting that, and what is that going to look like?
Yeah, and when you look on the Xpeng, similar to what we saw with NIO, as well as some other Chinese players, strong numbers coming out of the board in China. But right now, it's a $5 trillion market over the next decade. Big enough ocean for more than one boat. There's going to be many winners here. I mean, we have 130 to 140 players going after the EV market. And of course, they're going to have some erosion of market share at Tesla. But this is a rising tide lifts all boats in terms of EVs. That's what you're seeing in China. And I think that's what you're going to see in the US. I think GM, Fisker, Faraday and others as they really dive into the deep end of the EV pool.
Yeah, I think, when you think about competition for Tesla, because that's the kind of number one overweighing question that you get on every network with every analyst. And I think Gordon L. Johnson really tries to make it as if, it's important and it's a threat. But, it takes me back to marketing class, right? Back at Penn State University, when you learn that, okay, if you make a gas station or build a gas station on an intersection, right, you're going to get more business if a gas station comes to every single quarter of that intersection, right? So it's not like, oh, I want to be the only gas station here. No, if all four of those corners have gas station, then what does everybody in the city or in the area know? This is where you go to get gas, right? So as all these people build EVs or talk about building EVs, which a lot of legacy people are doing, all this does is grow the need, the demand, the excitement for EVs. So as you start to accelerate the transition to sustainable energy, and GM's talking about going completely EV, but they don't have a bunch of EVs, it sends you to Tesla. When this SPAC comes out and they're completely EV, but they haven't built anything yet, it sends you to Tesla, right? When you go to GM and maybe they have one EV and you test drive it, well, hey, I like that. That was nice. Let me check out a Tesla, right? So all of these things, believe it or not, are not bad for Tesla. They're catalyst. Because at the end of the day, Tesla is synonymous with EVs the same way Apple is synonymous with iPhones. And if you want to get technical, who's Apple's competitor? It's not Nokia. It's not BlackBerry. It's not Razer. It's not any of those legacy brands or brands that were in existence before Apple got into the phone market. Their number one competitor is Google and Android, which goes to the point where a lot of us believe that Tesla's ultimate competitor is going to be an Apple or an Amazon, not any of the legacy automakers.
Dan, kind of related to that point, what is the most common bear retort that you're getting these days on Tesla? Is it that idea that all this competition is coming into the market? A couple of years ago, it might have just been a balance sheet type question. Is it that competition question now as people look out 5 or 10 years?
Yeah, and I think many of the bears continue to underestimate the green tidal wave and everything that Tesla's doing, right? I think many of these bears are the same that were probably negative on Tom Brady coming out of the draft in '94. And it just speaks right now. The biggest bear argument is competition. Price cuts is how they're ultimately catalyzing demand. But that's not true because now you're starting to see price increases. And the pure numbers just speak to right now, we're in the second inning of this massive $5 trillion market. And I think the bears continue to sort of not see forest through the trees, in our opinion, as well as just what's happened, not just in Tesla, but the broader EV ecosystem that's being built here before our eyes.
To me, this kind of goes back to what Chamath is saying, what Stephen Mark Ryan is saying, what Kathy Woods is saying. We are still in the first or second inning of the Tesla story. You're not too late. I believe we're talking about a $10 trillion company much sooner than anyone would think, okay? And I think when you listen to a Dan Ives, a Chamath Palihapitiya, a Gene Munster, you understand that they don't have it completely, but they're starting to see it. And you realize that Gordon L. Johnson is merely a Skip Bayless who's figured out a way to make his money by talking about LeBron James, i.e. Gordon L. Johnson makes his living, because he's not trading money, right? Makes his money, makes his living talking about Tesla. Thanks for joining me. Congratulations to all of you that are Tesla investors. Once again, anything I say on here is only my opinion. Do your own research. And as always, reach for the best within you. I'll see you on the next episode. If you like this type of content, subscribe to the channel. If you love this episode, please drop a like.